Could you suggest some good books on investing? Sure. So I get this question a lot, which is why I included it back here, and I actually included a couple books here. So one of them is called The Intelligent Investor, which was written by Benjamin Graham. And so Benjamin Graham was a professor at Columbia University in New York, and that's why Warren Buffett went to Columbia. Because of this dude here, Benjamin Graham. And this book, it's a little bit dry, to be honest, but it's a great book. And it basically tells you how to value companies and how to think longer term. And this is Warren Buffett's favorite book, obviously. And when Warren Buffett came and guest lectured when I was at Columbia years ago, his wife, God bless her, she passed away, but his wife mentioned that day she was in the classroom that Warren Buffett actually brought this book with him on their honeymoon. So this is a great book about investing. Again, it's a little bit dry, but I think it's worth checking out. And I've got another book here I haven't really talked about much before, but I wanted to mention it on this call. So there's a book called When Genius Failed, and I want you to all read it because what happened was in 1998 there was this company called LTCM, which stands for Long-Term Capital Management. And what happened was they were the smartest people in the world, or so they thought, or so their investors thought as well. And they had Nobel laureates, Nobel Prize winners, the who's who start this company. And it was a spectacular failure. They invested in fixed income instruments, meaning bonds, currencies, etc. And genius certainly failed. And I bring this up and I harp upon this because I don't ever want you to take anybody's advice when it comes to stocks or any investments. I always want you to do your own research. Nobody's smarter than you. And I believe that. What we believe, we achieve. Perception becomes reality, like the Rodin sculpture. So if you want for homework, do a search on YouTube on Steve Jobs Smarter Than You, and that video will change your life. It's a short video too. But this book here kind of reinforces the fact that you've got to do your own research all the time. Never rely on anybody else. Otherwise, what happens is if you buy a stock and you rely on somebody else and the stock goes down, you'll sell it, right? You'll panic sell. And it's ridiculous because, Warren Buffett said the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Imagine that. Imagine your favorite product going down in price and you don't want to buy it now. Doesn't make any sense. If you do your own research, your own thorough research, you'll be a stockholder. You'll be there longer term. You won't be a tourist in that stock. You won't be renting it. You'll be a long-term owner. And when Warren Buffett buys a stock, he assumes that the stock market could be closed for 10 years. He doesn't care. He's that long-term focused. I want you to do your own research and never rely on anybody else. Don't rely on me. And I'll never tell you what stocks to buy. I'll teach you how to fish humbly, but I'll never give you a fish. And if you want to learn about how to analyze companies and make investment decisions, there's two courses I have, the complete personal finance course, as well as the complete financial analyst course. And you can go to my website and you can always get my courses there for the lowest price, harounventures.com. You can check them out. 30-day money back guarantee as always. Always do your own research, please. And if you ever see something called sponsored stories on a website, don't read them because somebody is biased and paid to write something to influence you. And I also don't advise watching financial television ever because there's a lot of interviews with people that are very articulate. CEOs and founders of companies are the best salespeople in the world. That's what they are. They're salespeople. And they're going to get you excited about their company. And I don't want that to happen to you. I want you to always do your own research and just understand that in business, whenever you hear somebody talk about a stock or any investment, understand that they're biased. If the CEO is talking about his or her company, obviously they're going to say good stuff and get you excited. And they got to the CEO position. They rose to the ranks because they're great at sales. They have great interpersonal skills. So just do your own research always, always, always. And a lot of times I'll have people on financial television or the news talking about stocks, and they own those stocks. And so they'll bias you to be positive. Just tune out the media completely and always do your own research. And I promise you that will make you longer term focused and you won't be, this won't occur to you when genius failed. And another book I actually have down here is called Fooled by Randomness. This one's kind of tough to read. They didn't do a great job with the cover, although it's a good book. And so Nassim Nicholas Taleb wrote this. He's a Lebanese dude. I'm a quarter Lebanese, represents. A really smart guy. And this book here will convince you never to be a trader, because there are no successful traders in the long run. It all ends badly because we don't know the names of any successful traders, but we do know the names of a lot of very long-term investors. And so be very long-term focused. Please, please, please ask yourself a basic question before investing in any company, which is this. In 5 years, will this company be more relevant or less relevant than it is today? And that will make you not panic if the stock market crashes. You'll be excited so you can buy more of your favorite stock. And for more details on this, you can take my complete personal finance course or the complete financial analyst training course. So these are just a couple of the books that I recommend checking out. If you're an accounting person, you can also check out a book called Financial Shenanigans by Howard Shillett. And it's a good read on looking for patterns within financial statements to tell if things are not going well. And what I love to do is I love to actually create charts. A picture kind of tells you a million things. I butchered that saying there, you know what I'm getting at. But I like to create a lot of charts in Excel of income statements and balance sheets and just look for trends. Because an object in motion will stay in motion for quite a while. Okay, so if you see revenue accelerating, it usually continues to accelerate in the future. The second it decelerates, revenue usually never accelerates again. And so private companies usually have revenue growth that's accelerating. And once private companies have their revenue growth still positive but decelerating, that's when the venture capitalists usually give that company to the investment bankers that take public, because most companies, this is the last thing I'll say on this, most companies that are publicly traded, yes, they have positive revenue growth, but revenue growth is decelerating. It's slowing, especially for the big companies. And if it's growing at one point, again, it's usually because they bought another company, which means it's not organic growth.